Bitcoin might have ripped 30% off the lows, but many people are still convinced we are going lower. Well, today we're going to be looking at 5 reasons that I think the Bitcoin bear market could be over, and we might be about to see a huge rally. The main one I have been covering, the ETFs, of course, led by BlackRock, have bought over $2 billion last week, causing the massive short squeeze that we saw. And they've seen the biggest inflow day this year, which is showing us there is spot demand building, which is one thing I've been telling you guys for a while. Until we see the spot demand, we might not be seeing much of a move. Looks like that might be on the table. But before I take a deeper look at the 5 reasons, let's start with this clip from Mike Selig of VanEck. I think it's a good context starter.
MicroStrategy sailor finally, selling Bitcoin at what looks like the bottom, looks like to be a great kind of newspaper headline bottom, which goes along with our 12 out of 12 quantitative signals. But, newsflash, a lot of the leverage in the system has been brought onto regulated rails. So, whether it's MicroStrategy or CME futures, most of the leverage in the space is now visible. And in the last cycle, when FTX and Celsius and Three Arrows, they all went bankrupt, that leverage was not visible. So, I think it's a lot better right now.
Okay, so Mike Selig of VanEck, am I misremembering his name? Anyways, he said something right there, which I was telling you guys yesterday, that this could be a possibility of something I'm seeing, and it looks like the price did almost exactly that. I'm not saying I'm, necessarily, excuse me, guys, necessarily right about it, but what we did see, which was super interesting, was, of course, as we saw last week, the massive short squeeze. One of the biggest short squeezes we've ever seen in the Bitcoin space, swiping all the shorts at the bottom. Then we get into about the 80, 81K range. And if you're looking at the chart, if you are chart boying out there, there is a massive wick yesterday, which it's kind of making the case that we might have seen the long swept. So they're grabbing liquidity on both sides, which, as VanEck, the founder of VanEck, just said, is we're seeing all the leverage be wiped out. And that is one of the telltale signs that we are starting to or about to make a move to the upside. You clear the leverage on the bottom, you clear the leverage on the top. You basically take everyone's money, so all the leverage is gone, and then you start ripping it. So tentatively feeling pretty good, even though the price is kind of going down. I did see, or rather, I was watching about a 4-hour trend line, or you could call it a daily trend line. Right now, it's not holding up so hot, but there's still a little bit of time left on the day. Anyways, let's get into this. So Glassnode dropped this morning, which is very interesting. It goes, after large market moves, staying objective and level-headed is difficult. Obviously, it's something I know I'm not very good at. This is why I try to look at the on-chain metrics. I try to look at the data. Obviously, I get excited. I'm charismatic. I'm loud and obnoxious. But guys, it really feels like the bottom is already in, and everyone's saying the opposite. Everyone's still waiting for October. But anyways, it goes on. Our latest weekly report walks you through the data, the liquidation cascade, who bought the squeeze, and the supply now sitting overhead. So I'm going to pop over here, and I will read a little bit of this. So executive summary. A record single-day short flush ignited the rally. That's what we saw last week. That's why we saw Bitcoin go from 62 to about 77. Which then burned through the liquidation cluster stacked across its path, which, as I've been saying, we have about 2 clusters right now. We have one on the low end at about 60 to 62K, and on the high end, depending on what numbers we're really looking at, is somewhere between 80 and 83, though we see here that Glassnode is kind of having them sit around 81 and 86K. Anyways, the move of last week was funded. It was by spot demand with $2.23 billion of ETF creations over the squeeze window, coins leaving exchanges, and every wallet cohort accumulating at once. So there's an interesting breakdown here. One, obviously, the big move was driven because of the ETF. because we saw $2.23 billion of inflows going into the Bitcoin ETFs. Again, majority driven by BlackRock. I believe the numbers were about 80% of the ETFs that were bought last week came from BlackRock. So Larry Fink might be employee of the month again. Hey, big Bitcoin's in control. It's okay. All right. No. I might actually touch on that in a little bit. But the other part that is interesting is we are seeing accumulation across the board. So every Bitcoiner out there, whether it's the whales, the sharks, dolphins, shrimps, fishes, I forget what the names are, but every wallet cohort from, 0.1 up to thousands of coins, tens of thousands of coins are accumulating right now, which is driving the point that we are seeing spot demand driven. And again, connect that with what Van Eck clip just said. The leverage is being flushed out. And further, you can spot where the leverage is now because it is in regulated rails. So if we're seeing spot demand and we are seeing that the leverage is being wiped out, that is very interesting here, because if we are going to confirm a move higher, it needs to have spot demand, which we are starting to see happen. That's a very good sign. That might be even the best sign that we're seeing. Spot demand is coming back on the table. It could be attributed to what we're seeing from the treasury. Remember, Scott Bessent came out and saying they might use $1 trillion to do long-term debt buybacks. It's basically showing everyone, yeah, maybe I don't want to buy bonds. Actually, further, maybe I need to sell bonds and go down the risk curve here, which means, of course, you want to be holding gold. You want to be holding Bitcoin. For us, we're just Bitcoiners, but it's showing you need to have hard assets. And further, maybe you want to have some assets that aren't connected to the traditional financial system. So that's very interesting to see. That's actually very healthy to see. Now, the cycle composite has climbed out of its cool band. Large caps led the rally, and the link to equities collapse. The large caps is, I think it's kind of talking about shitcoins, but this is interesting. The link to equities is collapse. As Bitcoin pumped, we saw S&P 500 drop. Now, Bitcoin pumped about 25, 30%, depending on where you're looking at, and actually if you're reading the wicks or not. And the S&P 500, I believe, is down about 1.7% this last week, which is obviously not the biggest move in our kind of from our perspective. We're like 1.7%, like it does that in an hour for us. But if you're a TradFi investor, 1.7 is kind of a big move. Now, obviously, that does have to deal with what is going on in the Middle East. There's still macro uncertainties going on. There's still not real convincing information out there of what's going on in the Middle East. It almost looks as if, the U.S. is basically going to capitulate here. I know if you're listening to the Trump administration, we're in control of the Strait. Iran's backing, saying the opposite. We did drop the, what's it called now, Operation Economic Outcast, which, if you read it from the surface, you could say is, economic D-Day, the largest economic sanctions that has ever been put on a country. Though, if you watch the press release, it was pretty interesting. Scott Bessent does this whole, we're going to sanction Iran, hugest sanctions ever. And then later on, he's asked about, are you going to go further and sanction China? Are you going to, really, really throw a wrench in the global macroeconomic landscape? And Scott Bessent's response, I think, was probably the most telling. He's like, why would we want to melt down the entire global economy? So it looks like they're really not going to do too much unless the U.S. is willing to go after China. It is just hot air. But we can't really do that. China is Iran's biggest economic partner. I believe it's about 90% of the trade that Iran has is through China. But we can't do anything to China because they are also our largest trade partner. So it really is kind of what I've been saying for a while. Presidency by press release. There's not really much substance to it. But anyways, enough of the macro. Let's go back here. So overhead structures converges, cost basis shelves, reladdered ask, the dealer gamma flip, and the liquidation shelf all sit between 81 and 86K. So as I was telling you yesterday, the numbers that I saw, at least from the leverage and where the sell wall is sitting at. It was somewhere between 80 and 83K. Glassnode is kind of moving it up a little bit, 81 to 86K. So a lot of the conversation is if we can get above 83K with a market close, then we are most likely going to be making a move up to the top. Glassnode's saying it's probably going to be between 83 and 86K. So that's the area we're all watching right now, somewhere between 83K and above. So options price hold into late September. The test 83.3K and above. The 70K cost basis and the 62K, 65K floor below. So what is that telling us? It's telling us that Bitcoin most likely, depending on what we're seeing right now, depending on the factors in the market right now, where the sell walls are set, it could obviously move. Bitcoin's gonna have a very hard time getting under 60K. It could potentially go to 62, 60 or 60K and 62K with some kind of bull market correction, because I'm convinced we're in the bull market. So the lower band is somewhere around 60 to 62K, and the higher band is 83, about 80 to 83K, depending on the numbers. So those are the kind of levels that we're watching right now. Again, if we can break above 83, confirmed bull market is on. The correction could go down to the 60, 62K range, which is still way higher than what everyone is still kind of expecting by October of this year, which I think the numbers I've been seeing is people saying maybe like mid 50s. Some people are still out here calling for like 37K. I'm like, you guys are lost in the sauce. That's not going to happen. At this point, it looks like Bitcoin most likely won't be able to break down under 60K. But I do want to hit on the ETFs a little bit here, and I think they have a good breakdown in this. So here we go. The money behind the move. The rally arrived with money behind it. U.S. spot ETFs took in $2.23 billion over the squeeze window without a single outflow day, the strongest 7-day intake of the year. Its best single day was the largest creation since January 14th of 2026, and price reclaimed the short-term holder cost basis on the way. Activity jumped without getting near the old records. Daily turnover across the squeeze week averaged $2.4 billion, roughly half the January-February pace, and a third below its level of last August. So we still haven't even seen record ETF inflows, and we got a very aggressive move last week, which is kind of telling. And further, it just shows like there's not much selling happening. And if we get a significant amount of spot demand, this is going to rip. All right. This is going to go absolutely crazy. Now, I really like this chart from Checkmate, and this one is probably my favorite chart that I've seen. Sorry, guys. Your boy needs another haircut. This by Checkmate, this chart is like the most bullish one that I've seen. I'm like, confirm, guys. We are in the bull market. Anyone waiting for a bear market is cooked. And actually, it's going to be very interesting. Before I show you the chart, it's going to be very interesting to see how the, quote unquote influencers and analysts on Twitter handle this move up, because people are so convinced of the idea that we are going to see another capitulation leg down into the, new lows, 57K. It's going to be, on the one hand, hilarious, and also kind of discouraging to see that. I think a lot of people are going to be just committed to the idea we're going to go lower, and they're going to miss the entire move up into the 83 plus range right now. And further, the people that are listening to them are also going to miss that move. So they'll miss about a 30 to 35% move off the bottom, which, if we think we're going to have an incredible bull run, I guess, 30% isn't that big of a deal. If you're still getting, the 400 to 6, 7, maybe 2,000% increases that everyone is kind of viewing. So maybe not the biggest L for them, but I would watch the people that are convinced we're going lower and how they are acting right now, when all the information I'm seeing is we're in a bull market. All right. Anyways, enough of that. Here's Checkmate's chart. The Bitcoin index performance since cycle low, measured from the time pain low of each bear cycle. You can see here For the audio listeners, you can't see, but this is a black line right here at the very bottom, which is this cycle. And it looks as if it's following every other bull market from the cycle low. Yes, we might get some form of little correction, in the next couple of months. And maybe people are going to say that, see, I told you we had one more correction in Q4. But that would also ignore the fact that we have been climbing since the low, which is, as we were talking for months here, around 57K. I know I said 60K, but 3K off 60K, what's a few K between friends? So this is my favorite chart right now. This is my favorite indicator that we have in fact started our climb from the cycle low and headed into a new bull market. Okay. Now, we have really good analysis from Crypto Quant, which is, they're becoming my favorite on-chain metrics right now. Glassnode's really good, but Crypto Quant has been, I think, very, very good on giving us information of where we might stand. Obviously, no one really has an idea, so all we can really do is just look at what the on-chain metrics are, compare them to previous cycles, and it's also kind of confirming in my mind that we are in a bull market. So here's Julio Moreno. He's head of research at Crypto Quant. He goes, market regime has switched to bull for Bitcoin. Basically, all metrics are pointing to the initial phase of a new bear market. Two things to keep in mind. Bitcoin's price still has to cross above its 360-day moving average, which is, of course, at 83K level, for the bull market to be officially confirmed. A price correction is possible given high unrealized gains after the recent price rally and potential selling pressure from a spike of exchange inflows. All in all, the data is very constructive. Here you can see the chart. Here are the 12 on-chain metrics that Van Eck was talking about in the beginning, which is, or is this one 12? Hold on, one. This one's 11. I think they're missing the news headline here, but the metrics are the MVRV Z-score, Crypto Quant profit and loss index, the bull bear cycle indicator, the inter-exchange flow pulse, the network activity index, stablecoin liquidity, Bitcoin demand growth, trader on-chain profit margin, realized price, and technical signal. It looks like we're in a bull market, guys. All right. So if you want to read this, here's the whole thing. It's on Crypto Quant. Regime shift. Bitcoin enters a new bear market. A 24% rally just flipped Bitcoin into a new market regime. It rallied 24 since Monday, its highest level since May 15th. After two macro catalysts, the market read is strongly bullish, which I've been covering. Of course, the catalysts were fiscal and political. The U.S. Treasury said it will double its long-term government bond. And of course, President Trump's White House conference did a little bit of midterm politicking, saying that they would be open to buying some Bitcoin. Of course, valuation metrics have turned decisively bullish. Demand confirms the shift. Again, I think that's the biggest metric here, is there is spot demand. Last week, I believe it was last week, we were looking at the on-chain metrics, and it was basically telling us that the Bitcoin price was futures driven, and until the spot demand comes back, then the moves we are seeing are not that convincing. Well, now we're seeing the leverage is being wiped and spot demand is back. That's bullish, okay? So this is a genuine regime shift, the initial phase of a new bear market, but it needs official confirmation, and that's where we kind of are sitting. That's probably the biggest signal for what this show is about. I'm showing you a lot of on-chain metrics. I'm showing you kind of what everyone is looking at. We're looking at kind of some fractals related to the past. And it's all hinting to the idea that we are entered into the bull market. But until we get that official confirmation above 83K, this is an unofficial kind of metric. So that is why everyone is looking at that 83K level. Until we get above 83K, you know, the bears can take their victory lap. But once we have a solid close above 83K, then we start to see the data is confirming the idea that we are, in fact, officially out of the bear market. So even though I may be jumping the gun a little bit by saying that we're in a bull market already, I think I've been kind of consistent on this idea that the 5760K was the low. We hit it in, what was it, February, or maybe it was, I forget if it was like March or April or June. I forget when we got that second dip down to 57. Maybe, I think it was in the summer. I think it was June. But everything we're watching is showing us that things have turned bullish. Things are turning positive. But again, until we get a convincing move above 83, we really don't have a strong confirmation of that being the case. But I would say we're there. I would say, actually, I've been saying this for a little while, that if you are waiting till October to fully pack your bags for the bull market, you might be running a little late, and you might feel a little panicked. You might feel like your position is slipping. So I would get my position before October. I'm not saying capitulate all your dollars right now, because you might get one more juicy dip buying opportunity before we really start to rip. But I know a lot of people that are still sitting on the sidelines. They were waiting for that October. They were completely convinced we were going to get under 50K. And now they're getting the opposite of that, where they're almost feeling like, man, maybe I should just stay in cash maybe it's a good idea to hold some cash into the bull market because I didn't buy the absolute bottom. Now, obviously, not full financial advice here, but holding some cash is obviously a good move. But I would not want to be over leveraged in cash. I wouldn't want to have a huge position in cash. I would be getting back into Bitcoin. But hey, I didn't sell the top and buy the bottom. I'm a third cycle idiot that held all the way down, and it is what it is. But I think now is the best time to continue to get back into the market. Honestly, I think that's the best signal that you could be hearing. Anyone who's telling you, like, wait till you buy the absolute dip under 50K, I think that's bad advice. I think right now is the best risk return opportunity to DCA back into your position, or, a form of DCA. And guys, I do have Matt Cole. At least he's on my schedule today. And if you watch today's show, you might be even more bullish because he's been dropping some really good tweets, and I'm going to pick his brain on what he's seeing. Anyways, going further, I don't know where I'm at. Is this 3 or 4? Here is, again, Ki-Young Zhu. He's the founder of CryptoQuant. This is his bullish metric. He goes, Bitcoin bear cycle is over. Full stop. And it's the Bitcoin bull bear market indicator. As you can see, we finally get a tick positive on this. And that does confirm, what we've seen in the past, that when this does tick, I guess this is the early bull, though I'm colorblind and I can't really tell the difference in this bull color and early bull color. I think it's early bull color. Bull market is back. From the various indicators that you can look, on-chain indicators, the bull market is back. Yes, we're a little early. Again, we're jumping the gun here. We do need the 83 confirmation. But if you are bullish, if you are biased towards being a bulltard, we have a lot in our tool bag here to confirm that we are in fact out of the bear market. Again, another CryptoQuant one. Bitcoin has officially entered the new bear market. The bull score went from 30 to 80 in a week. The fastest flip in a year. Again, 83K is the only thing left standing in the way. We have an 83K sell wall. It was actually sitting around 80K. And then it's been kind of shelved in the 81 up to 83K. Some of those were really old sell orders. But again, the level everyone's watching, rather, not the level everyone's watching, the levels that the on-chain indicators that the order books are showing us is 83K. So if you want to wait until we see a convincing move above 83K, by all means. If we don't break above 83K, at weekly market close, I would say that there is a potential to see it drop back down into the 60 to 62K, which is why I keep telling you on the show that I'm like 90% convinced that we have officially entered the bull market. And again, one side note here before everyone just says I'm like chart boying and, Opti's just, using the on-chain metrics, and it's The data is driving his narrative. It's not the price driving my narrative. Well, actually, it is the price driving my narrative. But we also have to remember that a lot of these on-chain metrics and TA in general it's really kind of like a lagging indicator. So they can hint to where we are going, but they will not confirm exactly the direction of the price until after the fact. So that's why I am kind of going more bullish right now. I'm looking at everything, on-chain metrics, order books, the leverage, liquidations, obviously the momentum. And it is maybe it's just I'm the source. My intuition is telling me like we have entered into the bull market. 60K was the bottom. Again, 57 was the official lowest low, but the 60K range was the bottom. The 10% kind of hold off is here. We might potentially see another drop down into that range, but I'm leaning way more heavily bullish on bear market's over. It is almost confirmed. All right. It's not confirmed yet. It's almost confirmed. And do I have one more? Yes, I have one more. This one's from Bitfinex. Bitcoin realized price UTXO age bands. The level that has stopped Bitcoin rally this summer just became the floor. Price cleared the 3 to 6 months cost basis near 73.5K. And as those buyers aged into it, the band they sold from turned into the support they now hold. The first retest is what confirmed it. So the level that has been stopping us all summer has officially been broken through, and it is now acting as support. So maybe I can even go a little stronger on my kind of percentages of where we stand. Obviously, we are seeing buy orders in the 60 to 62K range, but with this metric in mind, that 73K range being the support here, like I said a minute ago, breaking down into the 60 to 62K range is going to be a strong move, especially since we're not seeing a lot of sellers here. So if we are now squeezing the range that Bitcoin is moving towards, which is 73 to 83K, what are we seeing? Lower highs moving out of a bear market? I don't know, chat. I know we are just, Toddle, why did I ignore your tweets? I don't know. When did you tweet me, bro? When did I get tweeted at? Dang, I lost where this went. All right, whatever. Opti is my quant. No, I'm not. Hey, I'm looking at the same thing. I think it goes up and to the right. Yeah, I'm right there with you guys. Obviously, but hold on. Before I go further, obviously we are bull-tarded. Thanks for the financial advice, yo. This is not financial advice. All right. This is just my analysis of what is going. This is what I see going on. Dang, what was I just about to say? I keep blanking on my thoughts here. Oh, obviously, we are all bull-tarded here. It's kind of interesting because our chat, for the most part, people that watch the show, for the most part, I would say are biased bullish. And I think that's a good thing. I think we should always be optimistically bullish on Bitcoin, where the price is going. It almost reminds me of, I forget who said it, but it was Rockstar. It was Rockstar. He's like, guys, our price predictions should be so ridiculous that people think you're an idiot. And I think we all are biased here on the show and in the chat and that watches the show. But it is funny because remember when my co-host Nico, that is out. So I'm not going to, he's not here to defend himself. But it is interesting that when we finally started to enter the bear market and we saw that 60K bottom, you guys all turned against him because he's like, look, I could see maybe 40K being touched. And everyone freaked out. They're like, no way, that's not a possibility. He made a very simple case. He's like, look, 80% off the highs of 126K would mean around 40K Bitcoin. And we've been battling all summer on this idea. And then he slowly started to morph my idea as his idea that since we didn't see a blow off top, we weren't going to see a brutal bear market. And now it's almost but confirmed that the 55% bear market we saw is the least volatile bear market we have ever seen in Bitcoin's history. And I think that does lend to the idea that it's because the institutions are here. And this does kind of go into last kind of point here. I got tweeted at. So SF Huddle, sorry I didn't respond. I'll do better. Okay. All right. You know, hey, I'll respond. All right. I have yet to respond to one, but one of our friends in the chat, Dr. Dan, he kind of crashed out on me on Twitter last night, and I haven't responded yet because I was busy this morning getting the show ready. And he basically said that Simply Bitcoin has lost his way, that we are suit coiners now, and that I don't remember actually saying this yesterday. I think I was trolling if I did say it, but he said, Opti, you proudly stated you're a suit coiner. You're just simply Sailor. All you care about is number go up. And I really, really wanted to kind of just troll back instead of being serious. And then he followed it up with like, you know, captured coin. It's going to go to 1 million. Simply Bitcoin's going to do very well. And I think that captured coin comment was the biggest tell here. What we do know for a fact is the institutions have fundamentally changed how Bitcoin acts moving forward. Now, do I think that Bitcoin is captured because of that? No. And my troll response, and I'll respond back on Twitter. I was kind of thinking through it all morning as I was getting this show prepared. And my initial response is like, hey, big Bitcoin's in control, and that's okay. Like, can I start to feel good about the fact that number go up is going up? And of course, I joke about it all the time on the show that I'm a number go up maxi. It really is only in the idea that when number goes up, that's what really drives the most adoption of Bitcoin. And even though the institutions are here in Bitcoin, I don't necessarily think that negates the ideas that we believe in Bitcoin, that freedom will go up, that peer-to-peer cash will go up. Just because the institutions are here and they have the deep pockets and they're going to be driving Bitcoin, I don't necessarily think that means that everything we believe in Bitcoin is just completely captured. Like, you guys know me. Maybe I actually saw someone else say that's like, I hate that. It wasn't about me per se. It was, who was it? Maybe it was about me. Or at least as a simply, he's like, I hate the suit coiners that wear a hoodie as disguise. And I'm like, dude, I literally didn't even have a suit until we did the whole NASDAQ, ringing in the bell. I don't think I am a suit coiner at all. Yes, I'm guilty of being a number go up maxi. But my fundamental idea with all of this is, if you believe that Bitcoin was going to become the next world reserve currency, I don't see how you think that would happen just on the backs of the plebs. I don't think that the masses have the capital to take Bitcoin into the stratosphere. If you believe Bitcoin is going to, what's the numbers that are thrown out, the most bullish levels, like $500 trillion of capital, or 1/2 of the world's wealth, who do you think has that wealth? That is the institutions. They're the ones with the big capital. I don't believe we're going into the world without corporations. I think everyone will use Bitcoin, and that means the Larry Finks, the Wall Street institutions, the big banks, the corporations. They will all need Bitcoin. And I don't think that that necessarily means that Bitcoin is captured. In fact, I think this is our next test. I think it was always going to work this way. That if we are going to onboard the entire world, which is what I was initially sold on in Bitcoin, that we will onboard the entire world, not just individuals, but corporations and nation states. And Bitcoin would still retain its sense of decentralization. then this is how it was always going to happen. And further, hey, suits look pretty good, like you got to wear a suit every once in a while. But I really don't think I'm a suit coiner. Maybe the chat, am I a suit coiner? Suit coiners are people too. Oh, that's a good one. Join the Bitcoin Knots Discord to see the grassroots effort to fire the miners and give Bitcoin back to the plebs. I'm not a Bitcoiner. I've said it before. I think the ocean mining pool was a great idea. I think the Bitcoin Knots RDTS was a great idea. Another Bitcoin implementation was a great idea. Forking off Bitcoin, I think that's a dumb idea. But, what do I know? Number go up is first, then freedom go up. It was always going to be this way. That's what I'm saying. It's exactly what I'm saying. But we're going to take a lot of hella. Yeah, exactly. No, you're opting. You just sleep in a sleeping bag on the floor. In Tribelden, there's no decentralization of Bitcoin anymore. How could you say that? Why stay on a capture? I don't think it's captured. Yes, there's concerns about mining centralization. The big mining pool is what? It's like 5 big mining pools. And yes, there's institutions and there's Bitcoin treasury companies. But part of this conversation that we all saw with the BIP 110 stuff is, there's this idea that node runners need to take back control of the network from the miners. But I've always viewed this as it's a Mexican standoff. There's node runners, there's miners, there's the infrastructure built above it that run nodes. And no single entity has more control over the network than any other. That's how Bitcoin works. That's where I pull back on this whole idea. This is an economic network. Therefore, economic weight means something. Therefore, it's not the exchange infrastructure nodes or the mining nodes versus the node runners nodes. It's all of them working together or maybe working against each other that keeps the network honest. The problem is miners control the rules. Wasn't built to be that way, but it is what it is. But the miners can only do what the node runners, the people transacting on the network, they can only follow the rules that the people transacting on the network are following. Accepting arbitrary data and blocks would prevent plebs from running nodes, and if nodes become centralized in the value. Yeah, that's... I agree, but I don't think arbitrary data is going to kill Bitcoin, bro. I agree with that. But hasn't memory costs gone down? Maybe this is first world, what do you call it? Privilege. Watch your privilege, bro. Anyways, let's keep it moving because allegedly Matt Cole from Strive is going to come on, and I think he's got the node runners signaled a chain and the miners ignored it. How is that not an attack? Because it wasn't all the node runners. The highest levels is like 20% were running the Bitcoin knots. The RTDS or is it RDTS? I always mix that up. And that is the most generous numbers. From what we were seeing, it was like 5% of the node runners wanted a change. There is a thing called consensus. From the flip side, the majority of node runners didn't signal that. All right, anyways. Maybe I'll flesh this out a little more on tomorrow's show. I think I'm alone tomorrow. I could be I could be mistaken, but anyways, I'll be right back. I do want to cover. So River launched the latest numbers on the on addresses like whole coiners, etc. And I think it's sparking an interesting conversation moving forward. And then again, Matt Cole's going to be here in like 12 minutes, so I'll be right back. Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns, paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY. All right, guys. Chat's funny. You guys are funny. Think about what passes through your group chats in a normal week, your locations, your pictures, financial decisions, and maybe really uncouth jokes. All right. But do you trust the company operating the app to not dox and leak your info? Well, if you don't, Keet gives you another option. Free messaging and video calling apps built peer-to-peer with end-to-end encryption, no centralized company databases holding the family conversations or the boys group chat. Doesn't track metadata. And of course, you don't need to even give them a phone number and email to join. Just create a group, share files and photos, use it as a Google Drive, make audio and video calls again, peer-to-peer and end-to-end encryption. It doesn't go to the company server. All, of course, without giving up your info and making another corporate data profile. So go to keet.io/simply Bitcoin. That's Keet, KEET.io/simply Bitcoin. Download it free. Invite the boys or your family and start a conversation. It's easy as that, guys. Anyways, the current Bitcoin price is $78,270, which is a 38% discount from all-time high. Market cap is currently at $1.57 trillion. And the block height to real Bitcoin. 964,175. Man, I'm such a nerd. I do like Bitcoin dad jokes. It's crazy. Bro, I'm such a boomer. Unk level Bitcoiner. All right, anyways, I found this super interesting. So River, shouts out to River. They've been doing really good analysis recently. They did the self-custody one that we were talking about last week where, you know, Bitcoin and self-custody has gone down against institutions. That might be the bigger concern, in my opinion, is that the institutions are gobbling up a lot of Bitcoin. But this one's more for, you know, the self-custody guys. This one's more for the people here. So it goes 1 in 10,000 people own one whole Bitcoin. So for anyone out there that doesn't feel good about the fact that they only hold one Bitcoin and they don't have, you know, 1 million Bitcoin or 1,000 or 50 or 100, you are still in the 0.01% of the population of, I guess, net worth, if we're using Bitcoin as our metric of value for net worth. So if you own a coin, at least this is just, again, based on UTXOs, which doesn't necessarily mean that these numbers are set in stone here, but you're 1 in 10,000 if you have a 1 Bitcoin UTXO here. Obviously, I would say the number could slightly variate a little bit or fluctuate a little bit. Because maybe you'll have 1 Bitcoin on multiple UTXOs, but from what we can see, it's not perfect. It's not a perfect science here, but owning 1 Bitcoin puts you in the top 0.01% or roughly 1 in 10,000. It's absolutely crazy. So it says roughly 825,000 people. Again, I think this is kind of a conclusion based on the UTXOs on the network, which doesn't necessarily mean that the only people in Bitcoin that own 1 Bitcoin is because they have a 1 Bitcoin UTXO. You might have broken that up. But you can see, like, it really goes into, remember we had Brian Harrington on the other day, and he's like, look, if you own 2.1 Bitcoin, you are in the top 1% of the 1% of Bitcoin holders, or top of world wealth, because we price our wealth in Bitcoin. If you own 0.21, you are really ahead of, like, I think he said 1%. Like, you're really way further ahead of everyone else. And obviously, it is kind of a cope. I will give that. I do acknowledge the fact that this is kind of a cope, because what? 1 Bitcoin right now is 78K, 78K. It's not anywhere close to $4 million or $10 million or the fiat metrics that we use to explain real wealth. 1 Bitcoin is nothing compared to, the trillionaire on planet Earth. And I'm not a collectivist. I don't hate the fact that Elon Musk is a trillionaire, but in fiat terms, it's like it's a far ways away, right? We've all heard there's 58 millionaires in the world. There's only 21 million Bitcoin, and further, of that 21 million Bitcoin, it's going to be extremely hard for them to get 1 Bitcoin. So now that we are entering into a bull market, we don't know how high it's going to go. I just found it like this does make you feel a lot better about your holdings here. Now, obviously, it's been a brutal bear market. If you are one of the Bitcoiners that is all in on Bitcoin, you probably had to sell more Bitcoin than you wanted to survive the bear market. If you have fiat, you have fiat job and you got good cash flow, maybe you've been able to acquire more Bitcoin, and kudos to you. You did the bear market correctly. But you look at these numbers, and I don't want to make people feel complacent about their holdings, because obviously our message has always remained the same. Live below your means. Or maybe the opposite side, make more money so you can stack more Bitcoin. But if you're not in a position to make more money, then it's live below your means so you can stack more Bitcoin. But this process never stops, right? And so this is just the numbers that we have right now, which is very interesting. But I think the conversation probably gets more interesting as we start to move into the 2030s and beyond. And one is, obviously, if you're watching this show, if you're a Bitcoiner, you believe that the price of Bitcoin is going to continue to go up. So obviously it's going to be a lot harder for people to acquire 1 Bitcoin. So at this point, like, if you were able to get 1 Bitcoin, and maybe you have, being as conservative as possible, maybe we will see the 4-year cycle play out again, and you will be able to get a pullback, and maybe by then you might be able to acquire 1 Bitcoin. But if you are watching the price, I feel as if it's going to be exponentially harder for most people in the world to get 1 Bitcoin. So if you are close to 1, or you've gotten to 1, shouts out to you. You've done the hard work. You sacrificed, you DCA'd over 4, 5, 6, 7, 8 year period, and you got that. Let's not stack shame here. We are not bag shamers here. Every sat is worth it. But I think as we move farther, obviously, numbers going to go up. Price is going to get harder. I think we might be at peak whole coiner right now, which is kind of crazy to think that this might be peak whole coiner. Obviously, some rich people can come in with huge bags and acquire a whole coin. But the other factor that is, I think, more poignant right now is considering the cold card exploit. And I saw someone was disclosing more. So like the AI token wars isn't over yet. It really does make you think it's going to be even harder to maintain your bags moving forward. And the idea of peak whole coiner, this might be it. Like this might be the top of the top, and it's only going to dwindle from here. It's only going to get harder to acquire a whole coin in fiat terms, obviously. And then further, there's going to be a lot of landmines. And it really goes into the idea, you know, you hear it from a lot of OG holders in the space. They're like, you think if you got into Bitcoin earlier that you'd have a huge stack and you'd be, you know, on the yachts and a billionaire. And you just got lucky. But I think in the modern era of Bitcoin, what we saw happen a few weeks ago with the cold card exploit just shows like how hard it really was to be a Bitcoin holder from, you know, 2015 and earlier. And those guys really deserve all of the gains that they had. They were able to withstand all the FUD. And now you're seeing, if you are a newer Bitcoiner, you are starting to see kind of similar FUD lines, similar concerns, similar scares happening now, which we haven't seen in a long time. So one, I think we might be at peak whole coiner. Two, you know, it's one of these things that now that maybe we're getting out of a bear market, you can start to get the pressure off your back. You can start to like sigh, you know, get a little relief here and be like, okay, I made it through, and I made it through either my first bear market or another bear market, mostly unscathed. And moving further, it's only going to be that much more difficult. Anyways, Matt Cole popped in, so I'm going to transition here because I'm super excited about this conversation. Matt Cole has been killing it on Twitter. He's got some bangers that he's been posting, really good analysis. So I'm gonna pick his brain on these ideas. I'll be right back after this break, guys. Give me 1 second.
I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. I want to give a shout out to our sponsor, Keet. If you own Bitcoin, the next question is how you actually protect it. Keet takes a different approach to self-custody. It uses a 2 of 3 setup with keys split between your phone, your Keet hardware wallet device, and block servers. You only need 2 keys to authorize a transaction. So losing one doesn't mean losing your Bitcoin. And Block only has 1 key, so they can't move your Bitcoin on their own. There's also no seed phrase to write down. Hide somewhere and hope nobody ever finds it. Recovery is built in, so if you lose your phone, replace a device, or something happens years down the road, you have a path back to your Bitcoin. And the Keet hardware wallet now lets you verify what you're actually signing directly on the screen. So instead of blindly trusting an address, you can confirm the real destination on Keet itself. It's self-custody designed around what actually happens in real life, from lost devices and mistakes to long-term ownership and inheritance. Get yourself a Keet today and use promo code SIMPLY to get 10% off your new Keet. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com.
Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, cell towers can fail. Hurricanes, cyber attacks, blackouts. Most people go dark. Satellite phones don't rely on local infrastructure. With Iridium, 77 satellites in orbit, you can stay connected across the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123 also has Starlink, battery backups, Faraday bags for your hardware wallets, and everything you need to build your own off-grid Bitcoin citadel. Go to sat123.com/simply and use promo code simply for 15% off anything in the store. Okay, Matt, thank you so much for coming today. Also, before I go on, I love your studio all the time with the gym behind you. Great energy, man. I'd love to see that. Love to see that. Anyways, Matt,
Thanks.
I'm going to jump in on just some of your recent Twitter posts, because I think you've been dropping some really good alpha on the Twitter account. So let's start with the first one that caught my attention. And from here, I've been getting a lot of feedback here that I'm always too bullish, and I don't even think I'm as bullish as you are. So you just did this tweet here the other day, and you said you were looking at the Bitcoin priced in gold, and you think the bull market that is upon us is going to be bigger than ever. Can you expand on this for the audience?
Yeah, and there's multiple dimensions on this, and I wrote a series of 3 Bill Ackman-esque posts, and I don't normally do this, and if you've listened to me over the course of the last year or so, I'm generally pretty measured in my bullishness. I kind of underwrite about a 30% average annual compounded rate of growth for Bitcoin. And I've seen over the last few months the emergence of what I view to be a grand slam setup for Bitcoin. And it really comes down to a couple different dimensions. The first one was around the US dollar. And so generally speaking, obviously the US dollar is a fiat currency. When there's weakness in the US dollar relative to other fiat currencies, that tends to be extremely bullish for Bitcoin. And so the chart that you have popped up here, if you were to actually, if the audience zooms in, what you'll see is that kind of within a rising dollar, the last few bull markets in Bitcoin, so the 2017 bull market, the 2021 bull market, and the 2024 bull market, 2025 bull market, were happening during minor declines in the dollar, which to me, from a macro perspective, kind of bringing back my fixed income hat, makes a lot of sense in the world. That when the reserve currency of the world is losing steam, that will likely be happening in an environment that will be bullish for scarce assets, namely Bitcoin. But interestingly, during Bitcoin's history, it's generally been in a period of dollar strength. So Bitcoin has had its bull markets in small bearish dollar scenarios, but has generally been with the dollar going up. And this chart is a chart that I've been looking at even since before I was a Bitcoiner, of this long-term 40-year plus declining lower lows and lower highs of the dollar. That it's not just, and none of these charts are just drawing squiggles on the line. There's structural reasons why the dollar is likely to be weakened over time on purpose by the US government. You hear Trump talk about this, you hear Vance talk about this, but I think we're set up actually for a structural decline in the dollar, more similar to the 80s or the early 2000s, which would be something that's never happened in Bitcoin's history. I've been watching this, waiting for this to play out basically my entire career in finance, and I'm becoming increasingly confident that that time is approaching in the near future. What I mean by the near future really is likely in the next market cycle. So call it the next 4 years, probably max for Bitcoin, with the potential for it to be even faster than that. So that had me very bullish on scarce assets. Obviously, I'm a Bitcoiner, but just generally, that would be bullish for scarce assets, including gold, including silver. And so then the next question becomes, okay, well, if we're entering into a macro backdrop that'll be from a dollar weakening perspective, the most bullish in Bitcoin's history, then what it needs to really kind of light that flame even further is to be the fastest horse amongst scarce assets. So that became the long essay number 2, which is that I think Bitcoin has found a bottom versus gold, and it's beginning to move up versus gold and reclaiming its role that it should be the fastest horse. I mean, Bitcoin, as we know, should be the fastest horse. As Bitcoiners, we all believe that. And what was interesting is that this chart shows that Bitcoin versus gold topped in, I think it was late 2024, while the Bitcoin dollar chart didn't top until late 2025. So Bitcoin versus gold topped almost a year earlier. And then it bottomed in February of this year and is starting to show signs of emergence. And so this last week, Bitcoin broke out pretty definitively, in my view, versus both the dollar, as we all saw, but also versus gold, which to me says it's reclaiming its role as the fastest horse that it should be. And also, if you look back a little bit, I think it's why this last bull market that we saw in Bitcoin was kind of a lame bull market. And I think it left vibes pretty bad in this bear market, even though in nominal terms, it was a pretty mild bear market. So I think we're reclaiming more of that fastest horse energy in Bitcoin. And then the last thing that kind of has started to light even a further fire on this from a macro technical backdrop is that the actions of the treasury, which are likely to start to, in my view, push yields higher, even though the treasury is saying they're going to take actions to buy back the long end of the rates. I think they started too small. I think it was a strategic mistake. And I think they're going to pay for that with higher yields and ultimately are going to have to step in larger. Now, the treasury stepping in larger is not technically QE, but it really, when you actually get through the technicalities of what's happening, for all intents and purposes, it's the same thing as QE. And so I think we could just simplify it and just say it's basically QE. Money printer is going to go burr. And so that's the technical backdrop. And then AI, I think, is only a compounder of that and increasing the desire for scarcity. So I think this is a grand slam backdrop. I think even if only one of those things I laid out was true, it would be a reason to be insanely bullish on Bitcoin. But with all of them true, I think this could really be a bull market for the ages for us.
I hold on, absolutely love it. We love the bull sauce here. I did also see, I forget what podcast it was, but it was on Twitter. I think it was yesterday or 2 days ago, that you are convinced the 4-year cycle is dead. And it does kind of connect to, I'm sure you saw it, like BlackRock dropped a report last week and they were kind of saying, if you read it a certain way, it's like, it's not a real bear market. It's kind of like a mid-cycle pause. And it sounds like you're saying the same thing. It's like, we haven't seen a real bull market in a while. 4-year cycle is dead. This is just like a mid-cycle pause. And I know a lot of people, and I haven't seen you in particular say this, but a lot of people are attributing that to the, the business cycle, the ISM PMI chart. So is that what you're kind of saying right now? Is like, this was just a mid-cycle correction. I know we don't want to use the word super cycle, but that's what a lot of people like to lead it to. If this wasn't a real bull market, this next one's going to be even crazier than ever. Then what do we kind of like, how do we wrap our heads around what happened since October of 2025?
Yeah, so I'll even back up a little bit further. So if you look at the Bitcoin gold chart, when Bitcoin topped versus gold in late 2024, it basically barely beat the all-time high from 2021. So it basically just made equivalent highs to 2021. And so that lays into my view that Bitcoin actually didn't have a real bull market in the 2024-2025 cycle. It basically was just appreciating because fiat currencies are getting debased. But Bitcoin really should be the fastest horse amongst scarce assets. It is the emerging hard money. It's the best money that's ever been formed, and it should not be lagging or struggling versus gold. It should be making all-time highs versus gold, and I think it will. But because it never did in 2021, I would just say it was a it was like Bitcoin just kind of like taking a breather for the last 4 years, kind of generally moving up. And I think it's because I think it's bottom versus gold. I think we're going to move higher. I think we're going to make new all-time highs versus gold. And so that backdrop has led me to believe that the 4-year cycle is, for all intents and purposes, broken. I think to your point, there is general business cycles that tend to ride in roughly 4-year increments. Obviously, the halvening cycles running around in exactly 4-year increments. So there's reasons for kind of there to be cycles within Bitcoin, but I don't think it was a true 4-year cycle. And I am a believer of the super cycle theory, but I think it's important how you define that. And so how I've always defined that is roughly drops in Bitcoin around 50-ish%, which is what we saw in this last bull market, versus drops of 80% plus that we've seen in Bitcoin's history. So less downward volatility, but still with a highly volatile asset. And so to me, the super cycle thesis is not invalidated at all. And I think that for the people that are 4-year cycle believers, then it'd be hard to say it's invalidated, because it declined roughly right around the 4-year mark. But I think when you look at it in Bitcoin terms or gold terms, it tells a little bit of a different story.
Got it. Okay. Yeah, that makes perfect sense to me. Before we kind of go into what Strive's been doing, would it be safe to say that you do not necessarily believe in the diminishing returns idea in Bitcoin? Because that's been very popular the last few years. So what's your thoughts on diminishing returns in Bitcoin bull runs moving forward?
Yeah, I think it's nice to underwrite the risk of that being true, just to make sure that your company is set up for success. But looking through my writings of the last 3 days, my view is actually that this is a potential for a super cycle, a bull run, a return scenario that is something like Bitcoin's never experienced in its history. Now, from a percentage gains perspective, obviously in the early days of Bitcoin, the gains were crazy, but it was such a small asset. I think that relative to the bull markets of 2021, if you want to call 2024, 2025 a bull market, I think this one is set up to be substantially better than those ones. So it would be probably something that would be more similar to like a 2017 or a 2013, 2014, something along those lines. But it's going to likely look different. But we're just entering this structural macro backdrop that Bitcoin's never experienced before. And if you look at high growth assets that have just done really well historically, they'll go on parabolic runs. They'll have periods where they slow down and then they'll speed up again. And the reality to me is that the dollar and fiat currencies generally are worthless. They're being debased at increasing speeds. And so I don't think that will mean that Bitcoin's returns will slow down, actually, because they're gaining versus a fiat currency that's quickly and more frequently being seen as something that is losing value by more and more people.
Yeah, no, I'd agree with that. That's kind of been my less eloquent way of saying the same thing as you. Anyways, let's since obviously, actually, one last point on this, and I've been trying to get this across to my audience as much as possible, and I think you just laid it out perfectly. Is I know we don't like to say this time is different, but from a macro perspective, where this bull market that we're entering, like, it really is fundamentally different, and everything we're seeing is exactly as you just laid down. It's really going to be interesting to see how Bitcoin reacts, considering the macro landscape that we find ourselves in. And I know a lot of people, I think all of us Bitcoiners that maybe aren't so macro focused are looking at Bitcoin, and there is a little sense of PTSD. And, we're looking at the fractals and the old cycles, and everyone's just thinking it's going to play out exactly as it's played out before. And I've been trying to do my research and do my work to show, like, I think the background that we find ourselves in is fundamentally different. And I know we don't like to say this time is different, but we are in a new interesting phase in not just macroeconomics, but in the dollar's history. And I think you just laid it out like perfectly, that I think a lot of people are missing that factor.
I think that's completely fair. And I think that for people that are less familiar with these macro backdrops, what is helpful is actually just pull up either the US Treasury chart that I posted this week, or the DXY chart, the dollar chart. And what's interesting is that these charts, they go back well over 50 years. And so why this is important is that Bitcoin is basically just entering adulthood, right? It's not even 20 years old yet. And so in the context of a longer term history, that the saying that this time is different, well, from a macro backdrop, actually, in some ways it is different, but in a lot of ways it's actually similar to things we've seen before. Right now you have the Treasury chart up. Let me look how high Treasury yields used to be, and before that, how low they were. Right, they were very low, they went very high, they went back low. And then if you look at the dollar chart, what you'll see is that it's basically been in this structural decline for more than 50 years, and it's already had two very distinct bear markets in the late 80s and in the early 2000s. And so that line that I have going down, that really is actually in this chart saying it's not never different. It's actually saying the same thing that happened that's already happened 2 times. The difference is that Bitcoin has never experienced that. And so I think, I guess to round it up, I think the risk in my view and from my perspective is the timing. The timing is the hardest thing to get right. I think that we are entering in a period right now where the landscape is perfect for this to happen. But sometimes those calls are early. It's hard to get those calls right. But to me, it's never been set up or so clear that this is going to be happening, and it's an exciting time for Bitcoiners.
100%. I couldn't agree more with that. And I like the nuance that you put in there. That's like, hey, we've seen this in macro cycles before, but not in the history of Bitcoin, which is going to really shake things up here. Anyways, let's get into Strive and what you're doing there, because you obviously made huge news when Strive announced the daily dividends. I mean, you have it on the shirt, the daily dividend company. We've obviously seen 2025, there was a lot of capital attracted to the Bitcoin treasuries. There was almost, you could potentially say, the bear market that we'd expected in Bitcoin and the Bitcoin treasury companies. But then we saw the rise of the digital credit idea. And you obviously, I think, as one of the leading Bitcoin treasury companies and doing something very novel in this space, I think you're kind of positioned in a very unique space, like in a unique place here, because a lot of people are wondering whether there can be a strategy kind of competitor or a copycat, and can there actually be more than one strategy as companies? And I think you might have proved with Strive that you can, but you do need to kind of like tweak the underlying model before the market will catch on to it. And I think you did that with the daily dividend. So can you, maybe a lot to unpack there, but what's your view on just that idea?
Yeah, so to take a step back, let's imagine you wanted to start a new Bitcoin treasury company. I think the key has to be, what is your differentiator and why should people care? And I think last year, not to name any names, but just going to some of the Bitcoin for Corporations conferences and hearing some of the pitches that we were hearing, there was a lot of, we are, X, and we're just going to put Bitcoin on the balance sheet. And that is clearly not a differentiator. It's probably smart for your business. It's always smart for your business to put Bitcoin on your balance sheet. But from a perspective of causing a substantial increase in interest in your company, a substantial liquidity increase, it obviously is not enough to work. And so what we saw pretty quickly as our ability to differentiate was actually to try to build an engine to be the fastest horse. And so, part of that comes from all of our different backgrounds. I'll just say quickly on my background, coming from a large institutional fixed income asset management background, I managed $70 billion. And so why does that matter? Because I was effectively like a cruise ship. So if I wanted to move my portfolio, I had to do it very slowly, very intentionally, because my size was just so big. And so that in the Bitcoin treasury space is obviously strategy, right? They have over 800,000 Bitcoin. They've issued all these convertible notes, all these digital credit instruments. They're innovators. I think that the bearishness of them is way overdone. But regardless, for them to change course, to move directions, takes time because of their size. We as a small issuer can move much faster. And so that's why we found quickly that our best path to go on, and the place that got us the most excited, was to responsibly run amplification hot. So we run right now, our current amplification ratio is around 50%, which is substantially higher than strategy and the other players in the space, but also never post margin, never encumber our Bitcoin, run the strategy debt free. And so we're able, and with substantial cash reserves, so we're able to comfortably say, look, if we're wrong and Bitcoin drops to $40,000, like, it's our common equity is probably not going to do good, but from a structural perspective, we're fine. But if it runs, we have the best convexity in the place for this to do really well. And so our common equity investors, some of them just have equity mandates and they have to invest in equity in their Bitcoiners. Others just want high amplification done in an intelligent way. And so they love our equity, and the liquidity is flowing there. And then on the digital credit side, what we quickly found is that, you know, you could go to Bitcoin conferences and you can talk about SATA, and you know, people, you know, are interested, but it's really going to traditional finance, more of the boomer economy, people that want income, that are in retirements, and showing them a 13% yielding instrument that has substantially less volatility than Bitcoin. And they're not selling their Bitcoin to buy SATA. They're selling real estate properties. They're selling fixed income assets to buy an income asset in SATA. And it's a completely different marketplace that is getting some of the benefits of Bitcoin because it's in a wrapper that is comfortable to them. And I think that is the true innovation of digital credit. And I think it has a lot of room to grow from here.
Yeah, no, Matt, I love that nuance, because obviously, like, our audience is the hardcore Bitcoiner, you know, the hardcore Bitcoin maxi. They're like, just buy spot Bitcoin. And I think I maybe even started in that camp, but the more I cover the news, the more what you just said became clear to me, that, look, what strategy and what Strive is doing, and even what the ETFs are doing, is they're not necessarily marketed towards the pure hardcore Bitcoiner, though we did kind of see that change with the Bitcoin ETFs and them lowering the in-kind redemption limits like last week. But what they're doing is they're tapping into new markets. And I know Saylor's been out there trying to do a good job explaining this. You've done a great job to explain it. I can think of Joe Consorti's done a great job, or sorry, Joe Burnett has done a great job explaining this. And so with that in mind, to the hardcore Bitcoiners, I think they do need to view it as you just said. It's like, look, they're not selling their Bitcoin. We're tapping into different markets, and this is actually good for Bitcoin moving forward. Because obviously, when it last summer or last year, it was the running meme was a paper Bitcoin summer. And obviously, it's a good meme. It's a joke. Everyone's trolling. But when you understand the underlying mechanics, you're like, no, this is actually expanding the user base of Bitcoin. And yeah, it may not be that comfortable for the hardcore Bitcoiners, but this is actually a good thing for Bitcoin moving forward. This is how Bitcoin takes over the world.
Yeah, and I would say as another thing of positivity for them is that they should be in these rooms as well, right? With the boomer audiences and TradFi conferences and explaining Bitcoin, right? Like if Bitcoin's growth expands, people win. The reality in a lot of the conversations that we're in is that people are scared of the volatility of Bitcoin in a lot of the boomer retirement circles, and they just want income. They don't want to have to manage it, and so they like digital credit. But obviously, like, we're very happy if they buy Bitcoin as well, and sometimes someone buys SATA. We've seen a few examples of this actually already. And as they get comfortable with the product, they see that it's paid 13%. They're like, well, how is it able to pay 13%? And then they like, oh, Bitcoin. Oh, well, if this company can make money off of and pay me 13%, then maybe I want to own Bitcoin, right? Which is not a bad thing, which we love, right? But it's not usually where they are. And then the second really important point is that, you know, a lot of our ownership in both ASST, our common, and SATA is from institutional mandates. So I think our SATA probably has a higher institutional ownership rate on a percentage basis than STRC right now. But what's interesting about that is that these mandates cannot buy Bitcoin. And so you have a lot of portfolio managers and very large asset managers that are Bitcoiners personally, but in their, whatever, billions, multi-billions, tens of billions, hundreds of billion dollars portfolio, they cannot buy Bitcoin. It just will never happen. And so, but some of them can buy SATA in their mandates. Some of them can buy ASST. Some of them can buy both of them in their mandates. And so and they can't buy the Bitcoin ETF either, for what it's worth. Like it's because they have to own an income asset or they have to own an equity asset that it opens up Bitcoin exposure for trillions of dollars of assets. And I think this is an important nuance here, that no matter how hardcore of a Bitcoiner you are, you have to quickly ask yourself, should those mandates never be able to have exposure to Bitcoin because they can't buy Bitcoin or they can't buy the Bitcoin ETF? And my view is that absolutely we should be intelligently designing Bitcoin exposure for those people that understand Bitcoin risks that are sitting in those seats. I would have used to been in that seat when I was at CalPERS managing $70 billion. I could have never invested in a Bitcoin, in actually buying Bitcoin or a Bitcoin ETF, but I could have bought SATA.
Absolutely love it. No, yeah, I think, and I'll do from like my personal experience. I obviously came to Bitcoin, I would say very naive about how traditional finance worked. I learned about Bitcoin, and then through the Bitcoin lens, I started to learn about everything else. And it seems very easy for a Bitcoiner to be like, they should just buy spot Bitcoin. It's not that difficult. And then what you just said, it's like, yeah, but they literally can't because of the law. Now, I know there's like the libertarian view of Bitcoin where like, we're going to change everything. And I'm like, hey, look, let's be a little pragmatic. It's not going to change overnight. And we got to be in reality here of how Bitcoin is going to take over the world and where Bitcoin is currently, how young it is as an industry. And I think I've come a long way. And I think I said earlier, I've been getting accused of being the suit coiner here. And I'm like, I literally tell you to buy spot Bitcoin every single day. But just because I see that there is a product market fit for these products, just means I'm kind of dealing with reality versus like this utopian dream that I think maybe a lot of Bitcoiners might have, I don't want to say got wrong, but got caught up in it. And I'm like, I don't think this is necessarily killing the idea of Bitcoin. There has been this view, especially in the last couple of weeks, that Bitcoin is captured, Wall Street captured Bitcoin and it's no longer decentralized. So I think what you're saying is just very interesting from the opposite perspective, from the flip side of the coin. It's like, guys, there is a use case for this stuff, whether you like it or not, whether you're buying it or not. The market is seeing that, yes, we want this. And I think that's a good thing for Bitcoin.
I absolutely think it's a good thing for Bitcoin. And I'll say, I literally used to be a card carrying libertarian. In my wallet, I literally had a card that said I was a libertarian because of how excited I was to be part of that movement. And I'm no longer a registered libertarian, although I still have the same or similar fundamental views. But why I evolved was that the party never won and they never made any impact. And so they just ultimately lost. And so I had to question, well, with those views, not that I'm going to change what is truth to me. And so I don't think Bitcoiners should change what's truth to them. But I think the question should be, how do I maximally change the world to my viewpoint with those views? And I think an analogy here is that I've talked about in my most recent post was, imagine you were in DC and you were appointed to a position. Let's say you're Secretary Bessent and you understand everything that's going on, but the reality is that all the politicians that get elected, they're not elected to be a fiscal conservative to fix the debt crisis. And so he has to go out with actual constraints on how he can operate to fix the world. And I think that people that are engaging in the actual world, meeting with real people, understanding their real problems, can actually provide solutions that move the world closer to what you want it to be, versus, and I don't think it means sacrificing principles. I think we should always stand for truth, but I think that you also have to be met with the reality of the world and how do you actually maximally impact it in a way that's positive based on your beliefs. And I think that is what we aim to do every single day.
I couldn't agree more, Matt. I do want to be conscious of your time, but I want to bring up one last post that you just made, which actually just blew my mind because it's incredible what you guys have done at Strive. So just to read this here, you go, 1 year ago, Strive held 0 Bitcoin. Today, we own more than 1 out of every 1,000 Bitcoin that would ever exist. It's absolutely insane how much Bitcoin you guys have been able to acquire, what you guys have done in a year. So I'm going to use that as a bouncing board to where do you think Strive will be in about, the short term to the long term? Like, what is the short term mission of Strive and the long term vision for what you want to accomplish?
Yeah. So the actual mission is to be a fiduciary, to increase the amount of Bitcoin exposure each share has over time, underwriting a Bitcoin bull thesis that if plays out, the actual ownership after any type of claim you want to put actually goes up because Bitcoin's going up faster than our cost of capital, and that we help people get more Bitcoin over time. That is the goal. I think that is done when I look at the outlook for Bitcoin by continuing to lean into being the fastest horse. And I think we were the fastest horse. I think that's why we bottomed in February and people started to get more excitement about Bitcoin risk. And I think we're well positioned to do extremely well as Bitcoin goes up, to keep liquidity high, to keep putting out truth into the market. Just tell the market, like these long macro posts, what are we seeing? What are the risks? What are the opportunity? And, I think what's interesting about the Bitcoin industry and even some of our peers in the space is that, if this bull thesis is right, we're all going to win. Some might go up more than others, but, it's a good time to have Bitcoin risk and be maximally long Bitcoin for the coming years. And so, we're pretty excited. Obviously right now we had that post that we own 1 in every 1,000 Bitcoin. I think we will own substantially more Bitcoin. But I've never put out a prediction of how much, because really, as long as it's accretive, we want to acquire as much Bitcoin as we possibly can. And so I think it's a lot more, but how much more would be impossible to tell you.
All right. Well, hey, we'll leave it at that. But Matt, I also, just one quick sign off. I usually do this with all our guests. If you want to leave the audience with one final message, it could be about Strive, it could be about lifting weights, it could be about Bitcoin in general. What would be the final message to the audience before you leave?
Yeah, I'll leave with a message of positivity that's broader than Bitcoin. But when I look at Bitcoin, the declining dollar, declining fiat currencies, AI in the world of abundance, I think that we are entering into a much better future for generations to come, with currency based on hard assets, probably namely Bitcoin, but I think other places in the world, gold, but I think it'll be a substantial improvement. AI will drive abundance. I think we are going to move into an era where people can have a kid or a family and have one parent work and move back towards kind of, in a sense, the Renaissance era of building beautiful things. And so I think it's going to be messy. I think it's going to be, from a political perspective, really messy. But I think there are better times ahead, not just for Bitcoin winning, which I think it will, but for actual society. And I think the Bitcoin community plays an extremely important role in that future.
Well, I also believe that, and I hope that to be the truth. So, Matt, thank you so much. I wish you the best. I wish Strive the best. Continue doing Satoshi's work. Thank you so much for coming on today's show.
Thanks for having me. Chat soon.
All right. Awesome. Okay, guys. Well, I hope you guys enjoyed that as much as I did. I would highly recommend you follow Matt Cole on Twitter. Go read those 3 posts. Read them all the way through. Obviously, you got the overview of what the message is and what he's seeing, but I think you'll find a lot of value in reading those threads. They are like, as Matt was saying, they are, the Bill Ackman essays. So they are long, all right? But I think there's a lot of value in it. And one last thing. I know you guys joke and call simply Bitcoin simply macro now, because I have been covering a lot of macro over the last year. But I think there's a lot of value in understanding where we are in the landscape here so that we can actually clearly see where Bitcoin is going and what is on the horizon. And hence why I guess today I'm giving you guys some homework to go read those threads. Again, there's 3 macro threads by Matt Cole on his Twitter. Highly recommend you go read them in full. It might take you a little bit, but do the homework, do the work. Anyways, on that note, guys, you already know the deal. We'll be back tomorrow at 12:40 p.m. I know I posted at 12:16, but my time, my official starting time is 12:40. I don't know if I have a guest tomorrow. So look, 12:40. That's when the show starts. All right. I'll see you tomorrow. Have a good day. I hope you enjoyed today. On that note, as always, get outside. Touch some grass, get a workout in, get a walk in, get some sun on your face, eat some good food, maybe cut the calories a little bit, get your protein in, cut the calories, but eat some good food, call your loved ones, of course, stack some Bitcoin, take it into custody, and let's keep winning, all right? If we are correct that the bull market has started, and if Matt and I are correct that this is going to be an incredible bull market, let's not squander this opportunity. Let's make sure we are physically fit, mentally fit, spiritually fit, and of course, we will be financially fit if you are hodling the Bitcoins, okay? So on that note, peace out. I'll see you tomorrow. Have a good rest of your day. This has been Opti. Until next time, peace.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.